Now, global markets extended losses as Nifty trades below 19,000 for the first time since June and Sensex trades below 64,000. My colleague Sakshi brings us the details. Sakshi, take us to what experts are saying.
That's right. Well, we've seen global markets extend losses today. The Nifty trading below the 19,000 level and trading below 19,000 for the first time since June, remember. The Sensex trading below 64,000. We've seen broad-based sell-off across Asian markets, remember, even before Indian markets opened in trade. And experts saying that, look, concerns over rising oil prices. Remember, Brent crude has hit $89 a barrel, and analysts had earlier warned that if it breaches that $90 a barrel mark, it will be a warning sign for emerging markets, in particular for India. Israel-Hamas war concerns, of course, are mounting. The fact that the war could widen, another reason what experts are saying that, why, of course, global markets, investors, analysts, all concerned at the moment. And, of course, rising US bond yields, FIs selling consistently. We've also seen Australian shares hit a fresh one-year low. Remember, Australia's third quarter inflation came in higher than expected. So really a sea of red across global markets. Now, to decode this further, we are joined by Nasser Salim, managing partner at Flexi Capital. We'll also be joined by Deven Choksi. So, sir, just to decode this first from you. Now, many saying that, look, is it the Israel-Hamas war widening that is a bigger concern for markets, or US bond yields rising? What really is the bigger concern for India's stock markets?
Good morning, Sakshi, and thank you for having me over. See, just 2-3 key quick points, Sakshi. Number one, I think what you rightly said, this is a function of 3-4 major issues that are developing on account of geopolitical tensions. You rightly said Israel-Hamas war is looking not settling down in the near future, at least for the next 7 to 10 days. Hopefully it should settle down, but we don't know which way it's going to go. That's playing up on sentiment. Obviously, a strong US dollar. I must also bring your attention to FIs. We've seen a lot of FI selling happening. And also, Q2 results of 2023 have been broadly below estimates. And obviously, because of crude, which you mentioned, rising inflation concerns are some of the other triggers that have dragged Indian stock markets in the red territory. Sakshi, I think one of the other very key important points that I want to bring in again is, we've seen a lot of expectations were built in on certain Q2 results. For example, companies like TCS, Infosys, DMart have reported weak second quarter results. Whereas Kotak Mahindra, some of the banks, for example, ICICI Bank, failed to attract investors, even though they had decent results, but they were failed to impress investors. So that's another reason why we're seeing the markets in the current in the red.
All right. Now, for those asking, is the near term looking worrisome or the medium term? What would be your message to those people?
Sakshi, clearly, I think, we are continuing to say from a medium to long term, we are fundamentally very, very structurally strong as far as the Indian economy is concerned. And I must tell you, on the stock market, we see a lot of participation, which will come back after this inflation and hopefully H2 of 2024, when US starts to kind of, if not announce pivot, but somewhat nearing a pivot post H2 2024, we will see a lot of money coming back into India. Most importantly, Southeast Asian economies, and India will kind of be, the larger chunk in the pot which will receive those flows. So long-term, medium-term, structurally very, very strong. We don't see any issues in terms of earnings also coming up, because there's a huge consumption which is supporting those levels of earnings. However, in the short term, I think the only recommendation is you need to have positions in cash which you can hold on to. Keep on cash positions, number one. Number two, buy on dips. These are opportunities which augur very well for long-term investors to keep buying in, as long as you have the right horizon and the right mix of the appetite for investing in the right asset class. Equities as an asset class makes a lot of sense even in the short term to keep accumulating in dips, buying in dips, and short term may be volatile, but that should not move you away from your end objective investing goals.
All right. Interestingly, you mentioned, of course, the tech sector. Remember, NDTV has been speaking to IT analysts, and of course, campus hiring there, those concerns emerging. The fact that there's some IT majors unlikely to go in for campus recruitment this year. Your thoughts on which sectors are likely to be impacted the most?
We will decode this in a very simple way, Sakshi. I think all sectors which are dependent on global economies will get impacted. So, for example, we do see some drop in quarter revenues for IT. So, IT companies is something clearly which is going to get impacted. The other one is, all companies which are tracked to directly linked to oil. As you can see, oil has been hovering now around $95 to a barrel. I think those are concerns which, especially for countries like India, because we are a large importer of oil. I think sectors which are connected with oil, for example, oil and oil marketing companies. Number two, number three, I think directly transportation linked services will again get impacted. Logistics may get impacted. Those sectors may get a hit. And I think broadly, these three to four sectors, you will see some kind of demand destruction that may happen if the oil continues to surge upwards.
All right, very important message there on sectors that may get impacted the most. Of course, oil prices rising remains a concern. That's all from Business News for the moment. Back to you for other news.